Have you ever noticed how some of the biggest winners in business are often the companies that refuse to follow the crowd? A few years ago, if you listened to automotive experts, investors, and social media commentators, you would have heard the same thing over and over again. Toyota was behind. Toyota was moving too slowly. Toyota didn't understand the future. While other automakers were rushing toward an all-electric future, Toyota seemed to be taking a completely different path. Many people thought that was a mistake. Some even predicted that Toyota would eventually pay a huge price for refusing to fully commit to EVs. But today, those same critics are being forced to explain something they never expected. Toyota just generated around $32 billion in profit, making it one of the most profitable automakers on the planet. So what happened? How did the company that everyone said was falling behind end up making more money than many of the companies that were supposedly leading the future? And more importantly, what does Toyota know that so many people missed? The answer might completely change the way you think about the automotive industry. Before we get into Toyota's strategy, let's go back a few years. Remember when it seemed like every headline was about electric vehicles? Tesla was dominating the news cycle. Investors were pouring money into EV startups. Governments around the world were announcing aggressive targets to reduce emissions. Every major automaker seemed to be competing to see who could make the biggest EV promise. Ford announced massive investments. General Motors talked about an electric future. Volkswagen pushed ahead with ambitious EV plans. Everywhere you looked, there was a sense that the industry was changing at lightning speed. In that environment, Toyota looked almost old-fashioned. Instead of betting everything on electric vehicles, the company continued investing in hybrids, gasoline engines, and even hydrogen technology. To many observers, that looked like hesitation. Critics argued that Toyota was resisting change. Some claimed the company was stuck in the past. Others suggested that Toyota was simply afraid to take risks. The narrative seemed clear. The future belonged to EVs, and Toyota wasn't moving fast enough. But here's where things get interesting. Toyota wasn't ignoring electric vehicles. The company wasn't pretending EVs didn't matter. Instead, Toyota was asking a different question. What if the future wasn't as simple as everyone thought? What if different customers needed different solutions? What if millions of people around the world weren't ready for a fully electric vehicle? While many analysts were focused on headlines and projections, Toyota was paying attention to actual consumers. And consumers, it turned out, weren't all making the same decision. Some wanted EVs, some preferred hybrids, others still relied on traditional gasoline vehicles. Toyota believed that forcing a single solution onto every market might not be the smartest approach. At the time, that position wasn't popular. In fact, many people openly mocked it. But Toyota's leadership remained surprisingly calm. They continued improving hybrid technology, expanding production, and serving customers who wanted practical, affordable, and efficient transportation. Think about your own situation for a moment. If you were shopping for a vehicle today, would you automatically choose an EV? For some people, the answer is yes. But for millions of others, the answer isn't so simple. Maybe you live in an apartment where charging is difficult. Maybe you take frequent road trips and don't want to think about charging stops. Maybe you simply want something reliable that gets great fuel economy without changing your daily routine. Toyota understood those concerns long before many of its competitors did. Instead of assuming every customer wanted the same thing, Toyota built products for people living in the real world. That's why vehicles like the RAV4 Hybrid, Prius, Corolla Hybrid, and Highlander Hybrid became so successful. They offered better fuel efficiency while maintaining the convenience people were already used to. Drivers could save money on gas without worrying about charging infrastructure, range anxiety, or long charging times. The hybrid strategy turned out to be far more powerful than many people realize. Most automakers were either heavily invested in gasoline vehicles or aggressively transitioning to EVs. Toyota occupied a unique position in the middle. The company had spent decades refining hybrid systems, improving efficiency, reducing costs, and building consumer trust. By the time many competitors began taking hybrids seriously, Toyota already had years of experience and millions of satisfied customers. That gave the company a massive advantage. While others were spending enormous amounts of money trying to scale up new technologies, Toyota was selling vehicles based on technology it had already perfected. The result was strong demand, healthy profit margins, and a customer base that continued to grow. Another reason Toyota succeeded is something that often gets overlooked in discussions about the future of transportation: reliability. Let me ask you a simple question. If someone asked you to name a vehicle brand that has a reputation for lasting forever, what would you say? For many Americans, the answer would probably be Toyota. That reputation wasn't built overnight. It took decades of consistent engineering, quality control, and customer satisfaction. People trust Toyota because they believe a Toyota vehicle will still be running years after many competitors have developed problems. In uncertain economic times, that kind of trust becomes incredibly valuable. When vehicle prices are high and interest rates are rising, consumers become more cautious about spending money. They want products that will last. They want vehicles they can depend on. Toyota's reputation for durability became one of its greatest strengths. Now let's talk about SUVs, because this is where the story becomes even more interesting. Americans love SUVs. In fact, SUVs have become one of the most important segments in the automotive industry. Toyota happens to have one of the strongest SUV lineups on the market. The RAV4 consistently ranks among the best-selling vehicles in America. The Highlander remains a favorite among families. The 4Runner has built a cult-like following thanks to its durability and off-road capability. The Sequoia attracts buyers who need serious space and towing power. And then there's the Grand Highlander, which quickly became one of Toyota's biggest success stories. Toyota wasn't just selling vehicles. The company was selling exactly the kinds of vehicles consumers wanted most. That's a huge advantage when demand is strong. What's fascinating is that Toyota's success wasn't based on flashy promises. The company wasn't making headlines by claiming it would revolutionize transportation overnight. Instead, Toyota focused on something much less exciting, but far more profitable: execution. While others were talking about the future, Toyota was selling vehicles today. While competitors were chasing ambitious targets years down the road, Toyota was generating revenue from products customers were actively buying. Sometimes the companies that win aren't the ones making the biggest promises. They're the ones consistently delivering what customers actually want. There's another factor that helped Toyota achieve such enormous profits, and it has to do with scale. Toyota is one of the largest automakers in the world. That scale creates advantages that are difficult to overstate. The company can spread research and development costs across millions of vehicles. It can negotiate better deals with suppliers. It can manufacture products more efficiently than many smaller competitors. When you're producing vehicles at Toyota's scale, even small improvements in efficiency can translate into billions of dollars in savings. That's one reason Toyota remains such a formidable competitor. The company doesn't just build vehicles. It operates one of the most sophisticated manufacturing systems on Earth. The Toyota production system has been studied by businesses around the world for decades. Universities teach it. Executives analyze it. Companies try to copy it. The system focuses on reducing waste, improving quality, and maximizing efficiency. While that may sound boring compared to discussions about electric vehicles and futuristic technology, it has a direct impact on profitability. Every dollar saved through efficient manufacturing helps strengthen the company's financial position. Over time, those savings become enormous. Toyota's success isn't just about making great vehicles. It's about making those vehicles efficiently and consistently. What's even more remarkable is how Toyota managed risk. Many automakers place massive bets on a single future. If that future arrived exactly as predicted, they stood to benefit tremendously. But if consumer adoption happened more slowly than expected, they faced significant challenges. Toyota chose a different path. The company diversified its bets. It invested in hybrids, EVs, hydrogen, and traditional vehicles simultaneously. Some critics viewed that approach as indecisive, but from a business perspective, it provided flexibility. If one technology grew faster than expected, Toyota could adapt. If another technology remained relevant longer than expected, Toyota was prepared for that too. Flexibility often looks boring during periods of excitement, but it becomes incredibly valuable when conditions change. And conditions did change. EV adoption continued growing, but not always at the pace many forecasts predicted. Some automakers found themselves dealing with slower demand, inventory challenges, and pressure to reduce prices. Price cuts can be useful for boosting sales, but they often hurt profitability. Toyota, meanwhile, continued benefiting from strong demand across multiple segments. The company's diversified strategy allowed it to avoid becoming overly dependent on a single outcome. One of the biggest mistakes people make when analyzing businesses is assuming that popularity and profitability are the same thing. They're not. A company can dominate headlines without generating strong profits. Another company can receive criticism while quietly making billions of dollars. Toyota's story is a perfect example. While many discussions focused on whether Toyota was leading the EV race, the company remained focused on generating sustainable profits and serving customers. In the end, profits matter. They allow companies to invest in future technologies, weather economic downturns, and reward shareholders. Toyota's financial performance demonstrated that there are many ways to succeed in the automotive industry. Perhaps the most important lesson from Toyota's success is that understanding customers matters more than following trends. Trends come and go. Headlines change. Public opinion shifts. But customers ultimately decide which products succeed. Toyota spent years listening to consumers who wanted efficiency, reliability, practicality, and value. Instead of forcing customers into a predetermined future, Toyota offered choices. That strategy may not have generated the same excitement as some competitors, but it generated something even more important: results. So the next time you hear someone confidently declare that a company is doomed because it isn't following the latest trend, remember Toyota. Remember the company that everyone said was wrong. Remember the automaker that faced years of criticism for moving too slowly. And remember the astonishing reality that while critics were debating Toyota's future, Toyota was busy generating roughly $32 billion in profit. Sometimes success doesn't come from moving the fastest. Sometimes it comes from understanding the market better than everyone else. And in Toyota's case, that understanding turned into one of the most impressive business victories the automotive industry has seen in years. If there's one question I want to leave you with, it's this: was Toyota actually behind, or was Toyota simply seeing the market more clearly than everyone else? Let me know what you think. Was Toyota's cautious approach a brilliant strategy from the beginning, or did the company simply get lucky? Whatever your answer, one thing is certain: Toyota proved that in the automotive world, betting against them is usually a very risky move.